The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade on this Monday. Before we get into the charts, let's take a look at what traders are potentially watching out there. In the US, Senate Republicans pushing forward President Trump's sweeping tax cut and spending bill in a marathon weekend session. Meanwhile, President Trump telling Fox News that Japan engages in unfair automobile trade with the US and it should increase its imports of US energy resources to help reduce the US trade deficit. Meanwhile, Japanese factory output rose at a slower pace than expected in May, as sweeping US tariffs were threatening to derail the country's fragile economic recovery. And according to Reuters, China's fast fashion retailer Shein plans to file a draft prospectus confidentially for its Hong Kong listing. Let's get to the technicals now, and to do that we are joined by Jason McIntosh from Motion Trader. Jason, welcome back. Great to have you back on AusBiz. We do this every month, don't we? Just get across what we're seeing more broadly on the markets. Great day to do it because we are, of course, at the end of the financial year here locally. Let's begin then with what you're seeing on the local index.
Yeah, hi Andrew. Always good to come on and talk about some charts with you. And look, it's been a big 12 months in the markets at that. So the ASX 200 is into its third week of consolidation, made a recovery high earlier in the month, and we're now getting that pullback. What's notable is that this is the longest pullback since the April low. It's not the deepest pullback, that was shortly after the low, but it is the longest time between making those new interim highs on the way up. One of the features of this market over the last couple of months is that it's been stretched above the 50-day moving average. So on the chart, you can see that I got the 50 and the 100-day. The red one is the 50-day. So from that perspective, what we're seeing now, it fits the bill for a typical consolidation. The ASX 200, it got close to that 50-day moving average last week before rallying, but I think there's still a good chance there's some more consolidation to come, and possibly a retest of the 50-day moving average maybe over the next week or so. I think what distinguishes the recent rally to the sort of rallies we saw during 2022, you might remember we got some really strong rallies during 2022 followed by some big falls. I think what distinguishes the current market from that is that the dips are being actively bought, and we can see that the whole way up. The pullbacks have mostly only lasted a few days, and the fact that this is the longest pullback since April, I think that suggests that the money is still looking for a way into the market. It's been a case of buy the dip, not sell the rally. I think it's a case of the path of least resistance remains up, and from that perspective, I think it's a case of looking for opportunities to participate in the rally. I also want to have a quick look at the equal weight. So this is the ASX 200 on a market cap basis. This is the ASX 200 on an equal weighted basis. What's interesting here, the rebound over the last few days hasn't been as strong. And so I think what that shows us is that much of the strength has been coming from the big caps, at least just over the last few weeks. In particular, CBA, that's up around 7.5% over the last week and a half. The equal weight also remains below some key resistance regions. You can see that blue horizontal line across the top of the chart, and that takes in three recent peaks. So the high from earlier this year, two peaks from last year, late last year, and also the 2021 high over on the far left of the chart. So I think maybe there's some more consolidation beneath this resistance, maybe several weeks of sideways price action. And I think overall, if the ASX 200 is going to sustain an ongoing rally, it probably needs that broader participation, which becomes evident when you get a breakout in the equal weight. I think the overall structure here for both the ASX 200 and the equal weight, I think is positive. Rising moving averages, price above the moving averages, and I think it's continue to play this from the long side, and as always, use those wide trailing stops to try and see off those pullbacks and consolidations as we're experiencing now.
Okay, so positive trends we're seeing locally. Now, Jason, of course, on Wall Street, we're seeing record highs for both the Nasdaq and S&P 500. Let's go to the S&P and what you're seeing there.
Yeah, you're right, Andrew. So a new all-time high in the S&P 500 on Friday, and really this has been one of the most extraordinary rallies in the history of the S&P 500, both in terms of the size and speed that it's travelled at. So it's up about 27.5% in just 11 weeks. And it's also been extraordinary in terms of the market's resilience to what has really been extreme uncertainty. And when I think when a market rallies this much over a couple of months, there's been an historic tendency for further gains over the next year. And that's been the case since around the late 1980s. When we look at this chart, I think it's a bullish structure. We've got rising moving averages, prices above the moving averages, and it's been in a clear upward progression with rallies followed by short consolidations, then further rallies. Like we discussed with the ASX 200, that's a sign that buyers are looking to buy the dip, to get money into the market on those pullbacks. Hence, they've been shallow pullbacks. Very different to what we saw during 2022 when the sellers were waiting to unload stocks, and then you saw those rallies quickly give way and declines continue from there. I've got a chart of the Dow Jones. I think that's worth having a look at as well. I like the price action in the Dow from last week. Prices are rallying off the moving averages. You can see the 50 and 100-day moving averages on that chart. Have a look at that blue rectangle which I've drawn on the right-hand side. That's the last 5 or 6 weeks of trading. You can see that sideways trading along the moving averages. And also the moving averages have now crossed with the 50-day now above the 100-day. So that's a key factor for any sustainable advance. You need that shorter moving average above the longer average. And we're seeing similar price action in the equal weight. We won't look at that chart today, but it's similar to what we're seeing in the Dow. And I think that's important as any healthy bull market. It really needs that broad participation, and that's what the equal weight is now starting to confirm. Just on the topic of participation, I've got one more chart I want to show you. It's an indicator that I like to monitor. Now, this is showing the percentage of S&P 500 stocks which are above their 50-day moving average. So as the indicator declines, there are fewer stocks above their 100-day moving average, and then towards the top of the chart, most of the stocks are above their 100-day moving average. So look at what's been happening over the last few weeks. It's been coiling up. It's been coiling up for the last 2 months, really, and it's just sitting above its own moving averages. And I think it's on the verge of breaking to the top side. So there are currently about 59% of S&P 500 stocks above their 100-day moving average. And should this indicator break out, that would then lift that percentage up into the mid-60s and then potentially beyond. And that would be a sign of more stocks participating in the rally. And I think from there, it likely lead to higher prices. So just to wrap it up on an overall perspective, I think the way the markets are structured, both locally and in the US, it's a case of we've got rising moving averages, prices above those moving averages, and it's a case of the pullbacks are being bought. So for me, I want to go with what's working. What's working at the moment is upward momentum with modest consolidations. So playing it from the long side, looking for opportunities, and then as always using those wide trailing stops. It's because the idea is we want to be able to see off the pullbacks when they occur, and I think those wider stops give that potential to stay on what could become a larger rally over time, over the months ahead.
All right. Well, not a bad setup, particularly locally as we head into the new financial year. Jason, great to get across what you're seeing on the charts. Thanks for joining us from Motion Trader.
Always a pleasure, Andrew. Look forward to next time.
And that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.